Okay, I think we can gradually start. Let me share you my screen and show you the presentation. Dalia, is it possible that you still need to go to the share screen and click the make sharing available for everybody?
Sure. Is it okay?
Yes. You will see in a second. And clean up a little bit. Okay. I'm starting now. Hi, yeah, welcome again, everybody who just joined. This is a Reveal Insight presentation for investors. The way this is going to work is short presentation followed by a short live demo of the system as it stands right now. And after that, we do a question and answer session that hopefully takes quite a long time. If you have questions in between, just feel free to use the chat to get them started. And I hand over to my colleague Ellen right now to give you a summary of what Reveal Insight is all about. Ellen.
Thanks, Andreas. Hello and welcome. I'm Alan Scott and an advisor and early stage investor in Reveal. I'd like to start by asking you a question. Would you have welcomed the opportunity to be an early stage investor in Amazon or Airbnb? Because we believe we are the equivalent business idea for the 84 trillion institutional investment industry. Airbnb are the largest hotel but don't own a single room. Amazon, the largest global retailer, but don't own a single shop. Reveal intends to be one of the largest asset managers, but have no assets under direct management. We are a platform. We connect institutional investors to asset managers quickly, easily, and efficiently. I'll now hand over to Savannah, who will introduce you to the rest of the team and your speakers today.
Hello, everybody. I'll now introduce you to our speakers today. So I'll begin with the founder, Edward Vickery, who built his own third-party marketing company in California under the regulatory umbrella of New York-based broker-dealer. Over 10 years, he has successfully raised millions for various alternative investment fund managers. However, he also endured many inefficiencies, he lost many deals, and worked with many problematic managers, which hurt both his investors and his business. These setbacks led him to conceive the idea, which brings us here today. Then we have founder Andreas Mueller, who has worked in the technology consulting for over 20 years at companies such as Accenture, UBS, and Capco. He has already built the Reveal Insight platform and will continue to develop it, as well as ensure that his financial planning for the business into which you are considering an investment remains on track. We also have advisor and investor Alan Scott, whom you heard speak a moment ago. He owns a number of successful financial and tech businesses, and he's an experienced leader and entrepreneur. So as you can see, the team has already grown significantly since the launch in late summer this year. I'm one of the account managers in the sales team, and I have seen firsthand the excitement in the market for our product. So I will be passing this on to Edward Vickery, our business visionary.
Thank you, Savannah. So slide 4, opportunity. What we have, ladies and gentlemen, is the biggest opportunity that I have uncovered during my entire career. This is an $84 trillion industry which has failed to modernize and continues to operate using archaic practices, while many other industries have applied technology to assist the client in accessing and choosing non-branded vendors. Airbnb, Amazon, and TripAdvisor are good examples of this, redistributing market share away from the brands to the small vendors in the accommodation, high street shopping, and restaurant sectors. They have earned a fortune for themselves and their investors by achieving this. 90% of the assets in our industry, the alternative investments industry, are under the management of something like the top 20 or 30 brands: BlackRock, Bridgewater, PIMCO, Oaktree, etc. They all have around 100 billion or 150 billion or more. We estimate that there are around 50,000 asset managers across the private equity, real estate, long only, and hedge fund asset classes. Therefore, the other 49,980 managers desperately require a solution to disrupt this consolidated market. Small and mid-sized asset managers offer a number of advantages to investors. They tend to outperform, charge lower fees, and have lower minimum investment thresholds. Yet, they fail to attract assets, mainly because brands dominate as the safe haven. It is easy to identify the brands. There is little need to research and spend years getting comfortable with the brands. And investors know what type of professional service they will get from these large corporations. But what if you could get the performance of an emerging manager with the safety of a BlackRock? Slide 5. Why now? Due to the pandemic, asset managers cannot spend their marketing budgets on road trips and conferences. They require an alternative, which provides us with an opportunity to change their method of raising assets. Our industry has finally begun to digitalize. It has become standard practice to carry out Zoom video meetings like we're doing right now and work remotely. It should have happened 10 years ago. I would have a lot less wrinkles. Yet the financial sector has always been conservative and lacked creativity. For those many financial services professionals who benefit from their Swiss banking family name or Goldman Sachs being on their CV, it has not been in their interests to change the system. However, behavior is changing, and now is the time to take advantage of it. Slide 6, idea and plan. At Reveal Insight, we have built a platform which allows investors to efficiently select asset managers, as well as provide them with accountability and verification to protect their interests. This introduces meritocracy to an industry which has traditionally relied on relationships and brands. We apply data and technology to save time for all market participants, making investing safer and brokering more deals faster. Slide 7, problems for asset managers. Performance alone is insufficient to attract investors. If the performance is too good to be true, it often is. And if it is generated from taking too much risk, well, then it's worthless anyway. If the performance is average or poor, it does not sell easily. Therefore, the understanding of the strategy and trust in the team and business is also needed prior to an allocation being made. AUM is a big part of that, but managers can't raise assets without already having assets. It's a catch-22. Slide 8, problems for institutional investors. If an investor chooses to allocate to a non-branded manager, the onus is on the investor to identify which of the 49,980 non-branded managers is the correct fit for them. The onus is on the investor to carry out the research on the asset managers and spend time getting comfortable with their personnel. And the onus is on the investor to verify the authenticity of the manager's documents and seriousness of their professional setup. It really shouldn't be that way. And there really shouldn't be cars driving through my webinar. Whoever's got cars and traffic in the background, could you please mute your, it's not me, so that's okay. Can you please mute your sound? Thank you. Given the size of the market, investors tend to rely on introductions. Relying on referrals is a bad idea. Traders don't invest with their emotions. So why are investors allocating with their emotions? Shared commonalities, shared alumni, shared religions, and chance meetings at the conference bar create selection bias. Furthermore, the interests of third-party marketers and investor relations personnel are misaligned with investors. Now, I know this from my background as a third-party marketer. I felt incentivized to sell managers with lengthy lockups, with high fees, and strategies that were perhaps taking too much risk because it would maximize my revenue, despite this being at the expense of the investor. So that was a feeling I had to fight against. I imagine there are many people who don't fight against it.
I'm not sure how to answer that.
Neither am I, Bixby. If you are planning a holiday in the south of France and you ask some friends for referrals, are they referring you the bed and breakfast which is best for you, or the bed and breakfast which is run by their cousin? With Airbnb, you avoid that dilemma. With Airbnb, you also do not need to telephone a number of bed and breakfast options and ask each one of them the same questions again and again about the distance from the airport and whether or not they have a bath or shower. And perhaps you realize the analogy here. Reveal Insight fixes these same problems for investors trying to navigate the boutique asset manager universe, which is pretty big, as we've already explained. Slide 9, problems for intermediaries. And there are quite a few intermediaries on this call that I know, so this is quite relevant to you. Well, this is where my wrinkles came from, these problems for us intermediaries, right? There's so much work that we have to do because we're in a weak position. We must do both the work of the investor, sourcing the best asset managers, and also the work of the managers, selling to the investors. So we do twice as much work as the other market participants. And yet we're supposed to know more than everybody else. So they are also, so us intermediaries, we are also in a weak position in regards to collecting payments, as without a tangible product which controls the deal process, we cannot easily, we can easily be circumvented, and we have little means to track our deal progress or track the commissions which are owed to us. This has been a problem throughout my career. Relying on trust, I don't really like that. Or relying on other people, especially asset managers. Our brains are also far inferior at matchmaking than the power of a computer algorithm. I know the computers can think faster than me. So matchmaking investors with managers, a computer can do that better than me. Slide 10, solutions. How useful would it be for an asset manager to arrive at his desk on a Monday morning with 4 or 5 new video calls already scheduled in his calendar for the upcoming week with pre-qualified, suitable, and seriously interested investors who already feel comfortable enough to allocate? We are building a calendar syncing and video call facility on our platform so that investors can reverse solicit meetings with the most suitable managers that we can also help them to identify, saving everybody time. How useful would it be for investors to condense a 3-year research and relationship building process into just a few clicks? We summarize the quantitative and qualitative information that it usually takes investors years to collect on a single page on our platform. By applying levels of verification to the managers, we instill trust in the investor. By collecting ratings from current and ex-investors, we introduce accountability to protect the interests of our investors. Remember, investors are usually relying on brand for that accountability. By applying matchmaking algorithms, we speed up the process of identifying the most suitable asset managers. That's saving people time. We take the burden of identifying, researching, and building trust away from the investor and make it easier for the investment community to allocate to non-branded managers. That's our clients. How useful would it be for intermediaries to be able to broker deals while sleeping and track deal progress and commissions owed, while being able to identify and raise capital for only the most honest and professional asset managers, which is what I want to do? We have incentivized each user type on Reveal Insight to invite other user types to the platform. We incentivize investors to provide ratings as it allows them complete and free access to the full rankings and ratings on the platform. Otherwise, they have to pay for it. It keeps their identity anonymous if they're providing ratings on the platform, rather than the managers giving out their emails and telephone numbers, which is the traditional way of doing it, investor references. Likewise, asset managers are similarly motivated to invite their service providers to verify them in order to attract more investor interest. Indeed, how useful would it be to everybody to spend less time lost in this labyrinth of lunacy and more time enjoying life? Slide 11. Nobody else is doing this. There are many platforms providing simple Internet 1.0 information on asset managers. Yet there is nobody providing qualitative investor feedback and proactively brokering deals. The managers visit Preqin and Brighton House Associates to find information on investors, but the investors are visiting boutqiue Hedge, Morningstar, Bloomberg, and Eureka Hedge to find performance data on the asset managers, so they're not hanging out in the same place. We bring the two groups together to a single reputational marketplace. Slide 12. So how do we earn money? Investment consultants such as Towers Watson, Cambridge Associates, and Wilshire Associates charge institutional investors a lot of money for single data point subjective information obtained from interviewing the managers themselves. Our mission is to offer the investment community superior information and to do it for free. By doing this, we're able to attract the investors with our statistically significant objective data from real investors who've really experienced investing with that manager. And by doing that, we have the opportunity to earn handsomely from the managers receiving these capital inflows via our platform. We have developed a freemium pricing model to attract users and populate our platform quickly, while also generating early stage revenue prior to the larger commission flows, which, as we all know in this industry, do take longer to arrive because of the lag on the fee share. Having said that, we're trying to speed up that process by making everything more efficient, faster, and making it easier for investors to allocate sooner. Now, I will hand you over to Andreas, who will explain the financial projections and show you a short demo of the product. Now, please listen attentively because his Teutonic Knight accent can be tricky to follow.
Hi,
Andreas.
Thanks, Edward. Hi, guys, again. Yes, I live in Switzerland, but I am actually German. So bear with my German accent. We're looking at a growth slide. Obviously, I want to show you what we have done so far and what we are estimating in terms of growth going to happen. It goes from 2019 all the way up to 2025. So it's broken down in a couple of phases. We have already completed a bootstrapping phase. You know, we put in a lot of time and money, developed the MVP, did initial services and pricing, defined the initial customer value propositions, and even had a first paying customer coming on board for some of our services. And we tested this a bit with a couple of asset managers, investors, and intermediaries. And then we moved on to the what I called scale-up preparation phase, which is where we are right now until the end of the year. And that's pretty much hiring a team, which you've seen on one of the earlier slides. We're quite successful there. Excellent people have signed up. Very happy about that. And of course, further developing the system, working on some processes that we need to get us pretty much ready for the next phase, scale up to profitability, because this is indeed the phase. It ends early 2022, where we get positive cash flow based on our estimations. Our estimations are, of course, helped a great deal by the experience that Edward has discovered and has since 11 years ago when he was running his own business. Gives him a great insight into what is this business, what are the pain points, and therefore we can say, well, we have worst case, medium case, best case, bar charts there, and we're pretty much saying, okay, in the intermediary medium case, we're aiming to get 1,400 of our target group asset managers on board then. And continuing this, you can see on the right, all the way in 2025, it goes intermediary case, 30,000 asset managers on board. Our target group that we're estimating, the kind of asset managers that we want to get on board, you know, not the huge, very big ones, but the good ones, upstarting, relatively small, who have so much trouble right now gaining the trust that Edward was talking about. We're saying, well, 30,000. And likewise, down there, a little estimation on how many investors we want to offer this insight and this small due diligence we're doing with our verifications. And 23,000 is sort of an intermediate estimate. So I go on to the next slide showing a little revenue projection, again for the scale up to profitability phase next year, and then all the way toward the end. So we're saying quarterly revenue 500K for the last quarter of next year. And that translates into a growth until 2025, until we have annual revenue of 64 million, in the best case, 210 million. And bottom of the slide, you see pointing out the fact that indeed the red bars are the quarters where we have a negative cash flow, and this shows you how we are slowly growing into a positive cash flow. So we need a little bit of funding, although 11 years experience in this business and now digitizing it is a very strong point. We need a little bit of money, 500,000, and we're saying corporate minimum 50,000, private minimum 10,000. So essentially what that means is that if you invested 100,000, stick with it until the end of our projection phase, that would translate into intermediary case 6 million for you. Here again, a little bit indicator of the cost. We do have some costs. We run this very cheaply. We don't have an office, for instance. Still, we need to accelerate, want to accelerate more software development, more technology, features possible, bigger sales team, and things like this. On the right, you can see I did the costs versus the revenue and the big white bar in the middle, so that you can see what we're estimating in terms of positive cash flow. Okay, so now bear with me for a second. I will show you a little indicator of what the system looks like simply by going to apprevealinsight.com. When you go there, before you're even logged in, you can see what we can offer for what user group. So you can click on this, see two things. Now, if you're an asset manager, of course, it would be very nice of you if you had your profile, your corporate profile, presented with us, so you can add it, or you can look at all the others. All the other asset managers are shown in a view like this, where they just simply appear in a list with some basic information, and you can search by name, of course, but you can also refine this list, many fields which are based on, again, the experience on what are investors actually really looking for. So it starts with a pretty easy example. For us, you know, the rating goes down to many things. You can view them. You can certainly look at the details of such a page. This is what we call the corporate profile. It looks like this. So you see the name of that company, the rating, total ratings, the verification level. It goes through various levels from 1 to 5. You can see some key facts. You can see a little graph that shows you the score for each one of the 10 questions that you're supposed to that you are answering when you give a rating. You can give a comment when you give a rating. That shows up here. So a list of comments. Some information about the team, short CV, key documents, a company presentation, performance fact sheet, and then down here, the key data of this particular investment fund. Of course, you can have more than one fund. Key data would be here. So if you own that profile as an asset manager, you can certainly invite people to give you a rating. They get a link that you send to them. And when they log in, that's what they see. So they're asked to enter a rating as the first thing they see. They can scroll down, look at all the details they don't remember. But these are ex or current clients that can do that. And click on this, answer the few 10 questions. Just takes a few seconds, maybe give a comment, and very short amount of time, very high value. Of course, you can look at what exactly do these questions mean. We explain them here and so forth. Short period of time required for this. Okay, back to the slides. Oopsie. Sure. And I hand over to my colleague Ellen again to wrap this up.
Thank you, Andreas. I trust now your understanding of why, how, and what we do has increased significantly. We're a B2B marketplace in a specialized segment of institutional investment. We add value and efficiencies to the 84 trillion that flows between investors and the investment asset management industry. However, I'm sure you may have many questions or just simply like to understand more about how this business scales and why it will generate significant revenue. I'll hand over to our founder and business visionary, Edward Vickery, who will field your questions.
Thank you, Alan. So, if anyone has any questions and they're too shy to speak out and say them, you're welcome to write it in the chat field. And I'm also happy to introduce a little bit more of who's who from our team on the, Letizia is not here today, who's our HR person, but a number of other people are here. So just go ahead and ask some questions if you have some.
Hi, thank you for that that presentation, Mr. Vickery. There's a lot to digest here. I guess there's a lot to think about and a lot of good changes, I think. But one of the ones I wanted to ask about was the ratings and the rankings. You said that they're anonymous. I just want to make sure I understood they're anonymous from the manager perspective. Is that right?
Yeah, so that's a good question. So usually when and this is actually a big reason how I managed to conceive this idea, was because part of our process of being third-party marketers is to carry out due diligence. So part of that process is to ask for investor references and to call them. And when I did this across the course of my career, I found a number of interesting things. That often the investor references were friends or brokers. They weren't really investors. And I also found that when I spoke to real investors, they were actually shocked that I was calling them often. They said, many people don't bother to call us. And they really liked it that I was calling them, because they saw that I was actually carrying out due diligence. And then they would say, oh, do you have any other funds? And maybe not during the first call, but then they would sometimes email me back or reach out to me a few weeks later. I was quite surprised because they appreciated that I was actually making the effort to ask for the, to actually do a proper investor check and investor reference. But the onus was on me to do that, which I didn't really think is good, right? But it meant that it was quite a bit of work to do. And I felt like a lot of investors are not doing that. A lot of individual high net worth investors probably don't bother to do that in family offices and not always doing the due diligence that they should do. But when these managers are sharing their investor references, they're actually sharing emails and telephone numbers. So they can share those email and telephone numbers to a CIO at a family office. And next year, he might be working as a third-party marketer. And when he's working as a third-party marketer, he might sell his list to other third-party marketers. So those emails and telephone numbers are being distributed around as a commodity. And a manager shouldn't do that, but they have to, because they have to show their investor references. So part of the idea is I realize the value in actually commoditizing those investor references as ratings, which is what a lot of other industries have done, but also protecting the investor references so that they're anonymous. So yes, what the users of the platform, other investors can see is manager selection professional at Kansas-based foundation, or a CIO at Zurich-based family office, or a manager research analyst at Japanese-based fund of hedge funds, for example. They just see a summary of who gave the reference. We're the arbiter. We know exactly who did give the reference. We verify the reference. We do that with a number of techniques. If it's an institutional investor, we can verify the email address, the corporate email address. If they're a fund of funds, they should have a corporate email address, right? And the corporate IP address. If they're in Japan, they should have a Japanese IP address, right? So we can verify these things. We can also ask for the subscription forms, and they can redact the sensitive information, but provide the subscription forms to prove that they really are investors. And by doing that in a proper way, methodological way, I think it's adding a lot more value than just doing the calls.
You know, it's a very interesting point. Just also in terms of the workflow management, like I think, as you pointed out, or someone in the call mentioned, just the workflow processes here have not really changed in a couple of decades, it feels like. So that was something that I thought was interesting. Thank you for that.
Yeah, it's the efficiency of it. As an individual third-party marketer, you know, time is everything. I can't actually stop working easily at the end of the day because I think, oh, I could have made 2 more calls. I could have done this. I could have done that. It's all about a race against time. But on a platform like this means that it's all done automatically and it's efficient, saves everyone a lot of time, but not just the third-party marketer, but the managers and the investors too. Any more questions?
Ed, hello.
Yes, hello.
Hey, it's Jeff Sexton. How are you?
Hey, Jeff. I'm good.
I have a quick question, just in general, with respect to the comments about other managers from a legal liability
It's a
standpoint.
nice ring tune. It's the classical
You like
music.
that? Sorry about that. Yes, someone actually
I like
likes
it.
a nice handle, and I cannot get it to stop talking to me. At
There's
least
your
there's no
Bixby.
horn, no traffic.
My
on my-
Bixby spoke to me in the webinar.
Yes. Libel, slander, defamation, how will that be addressed if there's a manager who does not like or somehow finds out that they don't like what is being said about them on this platform?
Yeah, it's a good question. If you go to Google Maps, you can post any new business on there, and then it's open to rating by everybody, and that's sort of normal practice now. I understand asset managers have got big egos and they've got fat wallets, so they can hire nasty lawyers and attack you. But this is not really about negativity. The whole idea of this is not to slander managers; it's to sell managers. We're here to help them. Okay. If they're really insistent and they want to be removed from the platform, they can. But our platform's there to help them to raise assets. It's not there to hinder them to raise assets, right? And we're trying to allow them to prove that they deserve an allocation. You know, I have spoken to some managers who said, oh, when I explain what we're doing with the digital due diligence, with the ratings, they're like, there's very few managers, because the vast majority of managers love this. And you probably see a few more wrinkles on my face, because I thought this was going to save me time, but I've been working 20-hour days because the managers are just signing up. They love the idea. They really love the idea. But if you get an anger, one or two managers have said, when I've explained the digital due diligence and the ratings, they're like, oh, this is not for us. But I know what this is not for us means. It means that they've probably done something nasty. They've done something bad, or they know that they're going to get bad ratings, or they don't have an audit. Or when I ask them if they've got a pending legal case against them, guess what? They actually do. So when I verify it, rather than just asking them directly, which is the standard practice, by getting their legal counsel to log in with their corporate email address and verify that there are no pending cases against them, they won't do it. And I've found them out. So they don't want to be found out, so they don't want to be on the platform. And that's good, because I don't want bad managers on the platform.
Because I did notice, I mean, this has a lot of the qualities of SumZero, correct?
Not really. Is it different?
All right, because I just noticed they're
doing webinars, I think, right? And that's sharing alpha. So SumZero, I believe, what they are doing is they're rating portfolio managers on their best stock picks, and there's a league table. That's how they started.
That is a line of business that I don't think they should have gotten into originally. They started off trying to matchmake investors with managers, and you would say, I'm large cap growth, here's my performance, and an investor would start searching SumZero and find you as a large cap growth manager with good performance in their qualitative opinion, and then they would reach out to SumZero and ask to have a matchmaking meeting. But SumZero in no way, shape, or form would endorse or give any reference, or they would simply matchmake. And I will tell you,
matchmaking with data or matchmaking with their brains?
No, matchmake with data to try to avoid the legal liability of the investor ever pointing the finger at SumZero, saying, well, things went bad and you're the one who recommended or pointed them out to us. SumZero simply saying, look, you entered the criteria you were looking for in our search database.
Reverse solicitation.
Up popped these managers, and all we did was make the introduction. Don't blame us. And I am a lawyer by training, and I try to live that life down. However, I immediately see the exposure for you all, possibly, if things go badly, and no one hopes that they do. But that's really where I'm coming from, is you don't know who the managers are that are coming onto your platform, or the investors necessarily. And when someone gets mad or things go badly, blame is easy to throw around.
I understand that happens in business every day in all industries. Airbnb have unhappy hosts, and they have unhappy guests, and Amazon have people complaining, sending the product back. That's business. And I understand
Yes.
it's a high risk business because there's a regulation and, you know, like I said, managers have got a lot to, you know, but I've been on the flip side of that. I've been hurt badly by managers who haven't paid me their fee shares, millions of dollars, which I've lost, right? And I've tried to sue them and I've not got the money back. So, you know, that's just business. And I understand what you're saying.
Stop. I have one question for you in general then, and I'll stop, and I appreciate your forthrightness. What qualitative information are you proposing to provide about managers to prospective investors?
A single percentage score, because that's all you need. In Airbnb, or some of these services, they only give a 5-star rating. And I told Oren Kaplan about my idea 2 years ago. Oren Kaplan's the owner of Sharing Alpha, and he then put in a 3-star rating system, very simple for 3 categories. He added it to his platform a few months later. But I didn't make him sign an NDA, and it's his free choice to do that, and I'm okay. Actually, I want him to do it because I want people to start doing that because it's missing in the industry, okay? Finance is all, we don't have a tangible product. It's all about reputation and status, but it's done on a family, like I say in the presentation, a Swiss family banking name or where you work. It's not real merit. And those brands and relationships, that's not merit. That's not real merit. Merit is earned by doing a good job. And the only way you can have that is by having client feedback and real accountability. And it doesn't matter, even if it is a 3-star rating, as long as you've got some form of rating. I know if you look at Amazon, it's a percentage score. If you look at Airbnb, it's pretty simple, 5 stars, I think. It doesn't matter. As long as you're held accountable, you'll do a better service. Because if you went to a bed and breakfast in 1995, and you're a similar age to me, probably, maybe around there. You probably went to a bed and breakfast in the 1990s, and you probably got some bad service, right? Because I remember it was horrible before Airbnb came along. Now look at the United Kingdom. Thomas Cook has just gone bust because they're the biggest package tour operator in the UK. Nobody needs a package tour operator anymore. And I don't think anybody will need BlackRock if what we do succeeds, because you don't need the brand to do it for you if you can go directly to the cheaper, smaller vendor that gives you better performance at a cheaper rate. And BlackRock goes bust, like Thomas Cook's gone bust. Does that make, anyway, they're good questions, so I appreciate that.
Thank you very much for answering them. I appreciate it.
Thank you. I've scared away other people from asking questions because I was a little bit too passionate with that answer, I think.
Hi guys, this is Yvonne Berry.
Hey Yvonne.
Hey, how are you? I think outside of maybe the question about ratings, that's always something you could adjust, but I personally think this is a well laid out platform, easy to access, easy to read, and to evaluate, and probably one of the many tools that an investor will use. So I'm pretty excited about it, and I'm looking forward to talking to others about it. And
Thank you.
Whole layout as well.
And some of my ideas have come from your early mentorship, Yvonne, because back in the day, 10 years ago, when I didn't know very much at all about the industry, you helped me a lot. So.
Well, thank you. You've done a great job, and you should be very proud of this platform, and all the best.
Thanks. Any more questions? I made you blush, Yvonne. Your screen should be black, but it might have gone red now. And if we don't have any more questions, we can wrap this up. I think Dahlia is in contact with everybody in case anybody needs further information. If any of you don't have a way of reaching us, then please speak up now, but I think we're all in contact with everybody already.
Real quick.
Can I just, I'm sorry. Oh, go ahead, Faisal.
Ed, Andreas, good job, by the way. Do me a favor, send me the presentation so I have it after the meeting.
Sure.
Ed, can I ask one last question? Maybe it was in the presentation and I missed it, but are you envisioning a certain, a fund of a certain age and size being more appropriate for this platform?
That's a great question. That's a great question. Yes. Over 2 billion is really not on our radar, right? Because we're not interested in managers which are already known. right? We're helping the small and mid-sized managers. And yeah, when they've got 7 million or 32 million, it's really hard to raise assets for them. So it's not really that worth them being on the platform. We're looking at something like, let's say 250 million to 2 billion, which is the Silverleaf Partners sweet spot, right? And that's really, you know, those clients, they're the ones who want to help to grow. They perform well, they're solid enough businesses, and they're not well enough known. They need help. They need help to grow.
Good. Thank you.
You're welcome. So I think that's probably it. We can wrap things up. Thank you, everybody, for attending and listening to me rattle on.
Hey, Ed. Mudai here. Sorry,
Hey,
one
Mudai.
question. Hey, Ed. I just
Are you
want
in
to.
Japan or are you in Bermuda?
No, I'm still in Japan.
You should have come to the Asia event. What time is it there now?
3:48 a.m.
Wow, you work even harder than me then.
Well, I mean,
But you're still
I
in
have
Bermuda
to.
time.
Yeah, I wish I'm there, but you know, what are you gonna do? But anyways, Ed, I wanted to ask you about the ownership structure. I'm not sure if I missed that on the presentation, and also, what's your timeline like for this cap raise, and just kind of get the general idea of what your expectation is for now.
Yeah, well, we're aiming to raise that 500,000 before the end of the year. Andreas can tell you more about the structure of the company and the ownership.
Okay.
If he's not on mute.
No, I should be on. Yeah, okay. We're happy to send you a cap table later on so that you can see. But essentially, what we're aiming for is it's with the founders and advisors have some shares. The employees certainly have an opportunity to get some shares, right? And it's going to be 2 founders, a couple of advisors, employees. And what we're basically thinking about is founders have half, the rest goes to other people. And we have planned this current asset raising, like Edward said, until the end of the year, so that we're ready for next year. Because based on our even most pessimistic kind of estimation that we did, we expect the cash flow positive to happen not next year, but the very beginning of the year after next. Right? This is like the most pessimistic estimation that we could possibly come up with that makes that possible. So I think this is very different from my experience with, I worked a lot as a management consultant, I worked a lot with other startups, you know. But I think the key reason is that, hey, essentially it's an established business that is going to digitize, right? That reduces the risk somewhat. So happy to get back to you and show you the cap table and so forth if you want.
Okay, fantastic. Thanks, Andreas. What is 1 second? Let me just think over if I have any question. Let's see. I covered that, and just by curiosity, you've obviously accomplished a lot in terms of setting up the infrastructure. Everything looks very, very nice. Now, so far, how much money have you all put in? How much money have you spent so far setting all this up? Just in the ballpark figure, if you don't mind asking.
Well, yeah, sorry, I'm starting to answer already, Edward. In terms of cash out for the infrastructure and so forth, luckily we're living in an age where, you know, cloud providers make that not a very big impact, you know. So just for the technical stuff, there's a little bit for emails and a little bit for hosting the database and all this stuff, but it doesn't amount to very much. Of course, where we have spent a lot is giving in our time. I quit my job as a management consultant in Switzerland and worked on this 16, 17 hours a day just to get the development of the organization and everything, right? So that that amounts to quite a bit, I would think, you know. putting myself at high risk, super high risk doing this, because I think it's the right thing to do. You know, hundreds of thousands, certainly.
Yeah, sure. Sweat capital, I guess it's very hard to put a price on that. Let's see. So far, as I understand, you guys been at this for, what was it? Something like 2 years, more, give or take?
Yeah, give or take a little less.
Yeah, okay. Now, I'm just a little bit, I'm just kind of talking out loud here, thinking out loud, sorry. In terms of intellectual asset, I guess, I don't know what's the proper naming of this. It's relatively easy to do the same thing, if you will.
But I would have to.
About the moat.
I could give an answer from my experience. Maybe then Edward can chime in from his experience. Yeah, ideas, they typically count for 5%, right? Why? Because it's a heck of a lot harder to put an idea into reality, right? That's the thing.
100%.
That protects us somewhat, because my God, you know, I spend like all my time thinking about this, doing things, literally all my time. And yeah, I welcome everybody to give it a try. You know, they will be in for some surprises.
Yeah, the barriers to entry are significant, but it's also the first mover advantage. And if you look at Airbnb, they don't have much direct competitors. You know, they've got booking.com, but it's so difficult to get enough product on there that you can attract enough investors, and to have the investors and to know the investors, it's not easy to get into that space. And, you know, if you look at, I mean, Airbnb has booking.com as a competitor, right? But there aren't really many others. And Amazon has Alibaba as a competitor, but it's a different geographical region. They're more Asian focused, right? And eBay is a bit different, but we envisage that the first mover advantage will be significant. And even if other competitors come along, we should be generating enough business and making people enough happy that they stick with us. And we built a system, which I mentioned in the presentation, which incentivizes everybody to invite everybody else. So we can go viral and we can get a big market share quite early on. And then it's very hard for someone else to come in and do what we're doing. And I also say that the idea is quite revolutionary in that a lot of people, most people in the industry focus on performance. And I think they've got that really wrong. And I think what we're trying to do with the trust and the verification is more valuable than the performance. And performance is nothing without that trust and verification. And I've got a good analogy for that, but it's quite politically incorrect, so I'm not going to use it on the webinar. But without the trust and the reputation, the performance means very little, but people still, the vast majority of people trying to sell stuff are focused on performance. So let me add one more thing. We're trying to be agnostic. Everybody pays the same to us, 18% of the management fee and the performance fee. I had one manager and he said, and I was explaining to him, I don't like the way that some brokers are just picking the products that pay them the most. I mentioned that in the presentation, the high lockups and the fees. Oh, I've got to sell that product because I make a lot, right? And most third-party marketers have only got 20 or so products, so they're not agnostic. They want to sell their 20 products. They want to push it on the investor and impose it on the investor with their charisma, with their relationship, leverage their relationship to impose what they want to sell on him. No, that's not what we want to do. And I explained this to this guy. I want us to be agnostic and find the best manager for the investor, to make the investor get what's best for him. And I explained this to the manager and he said, oh, I'll pay you 50%. I was like, you haven't got it. I don't want you to bribe me to sell your product. I know that's what I don't believe in. I want us to be 18% for everybody, flat amount. The investor can then trust us. We've got integrity as the arbiter. They come to us because we've got that integrity. We're not just selling them something which benefits us. That is something that nobody else I know is doing. And that, I think, is pretty magical.
Can I add something to that? Also, a big barrier of entry that we have is the point of difference where Edward has the contacts. He has the contacts from the supply side and the demand side. We're talking about thousands of asset managers and thousands of institutional investors. So that's also a very big point that differentiates us from the rest of anybody who tried to copy us.
Definitely. It's a business that already exists, that digitize it. You can see it this way, you know? All contacts stay the same.
Yeah, so competitors would have to come from within the industry, not from outside the industry. And a lot of people within the industry don't view the world like I do. And maybe I'm crazy, but I just think that you can achieve a lot more if you make the investor happy, not the broker or not the manager, but making the investor happy, you corner the market.
This is Faisal. What I will add for Reveal Insights benefit here, there's some nuance to this business that isn't easily learned. It takes a long time. So Andreas, Ed, with our help at Silverleaf as well, have sort of like the inside track in what the pain points are, what the ways to communicate, the ways to get information out that you don't come by very easily.
Thank you, Faisal.
Yeah, and in addition to this, I would like to add that we have been extremely lucky with the people that we managed to get on board so far, right? Far exceeding my expectations, given the state we were in when we started to hire the people. We have managed to hire really a team of really excellent and experienced people to work with us. An experience I've had always, even in the very beginning, that there were people who are willing to put in their time to help us, you know, because they...
Yeah, one more thing about that is we built a section within the platform for other intermediaries to collaborate with us. So I know a lot of other intermediaries inside Silverleaf Partners and outside Silverleaf Partners. And this machine that's been built helps them to broker deals more efficiently, helps them to identify the best managers to work with and not to work with bad guys, which protects their reputation and their careers, helps them to broker deals more efficiently and helps them to track the deals that they're brokering, see which of their referred users are actually logging in and how much progress they've made, which profiles they're looking at, which gives them some feedback. Because as an intermediary, you don't get much feedback. Often you get completely cut out. So, have we answered those questions? Muda, anything else, sorry, that we haven't covered? We can always answer later on as well if you...
Yeah, I think for now, I think we're pretty clear. So I guess I'll just get in touch with you directly.
I was directing that just at you because you popped up on the video screen right then. I don't know why. You didn't make any noise. Usually when you make noise, you pop on the screen, but you were quiet.
Right?
You popped on.
Oh, okay. Yeah, I'm
just your video popped up.
Here. Yeah, I'm still new at this thing here, so but it's nice.
Yeah, I was saying
it.
Yeah, Zoom is pretty cool. I think there's a lot of value in actually seeing who you know, people that you talk to all the time on the telephone. You can actually see them.
That's right. Yeah.
Them. Yeah.
I don't know if you follow the news, but some guy got into somewhat of a scandalous trouble. He was doing something, you know, a little bit nasty, I guess. So, anyways, I don't want
on
to
Zoom. No, that's okay. There was an incident in Sao Paulo in Brazil, which is quite funny. If you Google the Sao Paulo, Brazil councillor on the Zoom call and see what he did on the video, it's quite funny. He forgot to switch his webcam off, basically.
Oh, shoot.
Oh, there you go. Anyway, it's quite funny if you get to see it. Okay, so I guess we can wrap this up, unless there's any other questions from anybody else. People keep chiming in at the last moment.
Thank you, guys.
Beautiful.
All right, thank you, everybody. Thank you, Alan, Savannah, and Andreas, for your contributions. Take care. Bye.
Thanks, everybody.
Thank you. Bye.
Very nice meeting you all.
Bye, Dalia. Bye, Budai.
Okay, cheers. Bye-bye.
Bye.
Take care. How do you leave meeting?
Oh, okay.
I was just waiting.
Hi guys, it's really good work from all of you. and I think we are going to make it actually. Yes, it's like we are getting better every day.
Yep.
And I think tonight's meeting, I think it's very positive for all of us.
Yes. Yes, I think so too. I think so too. It helps everybody. And the preparation even helped, you know. This is really good. And of course we can use the recordings or we can repeat it whenever we want to.
Yeah, this one was intense a little bit, no? Tough questions, like it really make us question.
Yes, true. Even though I still have some harder questions on my mind that luckily weren't asked, you know.
Yeah.
There were many questions in private talks about, you know, the rating, how mathematically sound is that? Like, we both have the same experience and I give a 9 and you could give an 8 or a 10, you know.
Yeah, yeah.
So I was preparing for all of this, and
Yeah,
also, you know,
human factor, like how are you gonna calculate what's
well,
the 8 or what's the 5 in each person?
true, but I don't think it's that complicated, because if I give an 8 for the same experience you have and you give a 9, right? You're not going to give a 2 for the same experience, right? For sure. So I think that there is going to be 3 areas,
Yeah.
bad, medium, and good, which already gives people a lot of information, you know?
Yeah.
Because it's going to be some kind of, if we have enough ratings, it's going to be some kind of bell curve anyway, where, well, you could adjust it mathematically, but I think it's just fine if you just add it together, you know? Somebody who has an 80%, and there's one guy, that's another thing, the fraud, you know, or stuff that are out of line. You're going to statistically look at that also. And if somebody has an 80% and then somebody gives a rating of 10, you know, might be something wrong, might be worth to look at.
By the way, for example, when I check booking.com and sometimes when I see like high ranked places, I check and it's super shitty why it's high ranked. So it happens anyway. It's just a little bit more transparency. That's all. It doesn't have to work perfectly. It will never be perfect if there's like a human touch somehow. So I think.
And you know, and then there's the fraud question. Yelp, you know, Yelp, of course, they have a lot of legal issues because obviously the restaurant owner sometimes wants to be his profile, on-service profile removed because too many bad ratings.
Yeah.
And Yelp is always saying, no, we don't remove anything.
Yeah. Yeah.
But it is, of course, you know, something you need to look out at. What happens if a super rich asset manager with too much free time and likes to go to court, give his lawyers something to do, you know, gets a few bad ratings. And I try to mitigate that a little bit. It's possible to, as an asset manager, to write something next to a rating. You know, yeah, I don't agree, or sorry, or that's not the perfect solution, but I'm hoping it helps a little bit, you know, to get the anger off. And then, of course, we look at before it goes live, so to speak, with the ratings. We just look at each one, right? And last year, when we were doing this a lot with startups, 90% of the guys who gave a rating, we actually called and talked to them, you know, because they're investors, so they're helpful anyway.
Yeah, I think it's okay to make it like in between a little bit. Not everything is automatized, but it's okay to be a little bit manual.
Yeah, exactly. I'm aiming for sort of 80% is automized, and there are 20% that the automation determines somebody should look at, you know, something like that.
Let's see what will happen. But we should definitely like keep the contact and I already took some names just in case, like people who got. Do you think this guy? Did you know that guy who asked questions about some zero? Not the questions, but who basically said you're doing the same.
No, this guy.
The lawyer guy.
No, I didn't know him.
Jeff, yes.
You knew him?
No.
Yeah.
Okay. I know this guy. I didn't know.
Do you have any connections with some zero or not? I mean, I wasn't sure because he just told so many times the name, so I thought maybe he's working for them, but I'm not.
I don't know, but it's possible that.
I'll check him a little.
I mean, I knew Faisal, of course.
Uh-huh.
You know, the guy with a still picture with a palm behind him. And I talked to the Japanese guy before.
Okay. And there was one other guy, I think he was taking notes. I don't know who he is. Maybe Edward's contact. This Gavin Kelly guy.
Okay.
And he was taking notes. I'll check this guy, Jeffrey Sexton. I don't know who he is. It's okay, but it was good this time. It was a little bit more intense. Late night fever, I guess. Okay. Thank you, guys.
Okay. Thank you so much for your efforts and have a nice night. Enjoy your weekend.
Yeah.
Thank you very much. You too. Talk to you guys soon.
Thank you. Thank you so much. Bye bye. Have a nice night.
Bye.